If you're still mapping market structure the wrong way, you're leaving money on the table. Stick around because in this video, I'm going to show you how to market correctly across multiple timeframes and why you've been getting it wrong. So many of you have been calling for me to do crypto because you have suggested that there's too many wicks and you cannot mark up your structures on cryptocurrencies with this technique. I'm going to go through Bitcoin from the monthly and we're going to map the charts all the way down to the 15-minute using this market structure technique. So stay tuned to the end so you can see exactly how this is done. And of course, if you want to learn more on the 90-day profit training system, check it out. There'll be a link below in the description of this video. So I'm going to start on that monthly time frame. What we're going to look first for, look back in previous movement in price. And remember, if you're not sure on the exact process, how we mark this new structure technique, check out the video at the end of this video. So watch this one all the way through, then go through to the next video and that will go through exactly how you would actually step by step mark up these structures. But we have this previous high overhead to the left. Okay, so I can see this is a valid break of structure to the upside using this market structure technique. We then have a valid low marked here. We would have failed to break out of this high. It's just a sweep in the market. We come back, make a higher low, and then the market has a new valid break of structure right here. So this is how we look at this structure. Price then, since this breakout has pulled back and we've created this higher low here in the market, it is not a valid swing low for me to mark as a current low here, okay, with a new break of structure here. That is not valid with this strategy. Now, if you're not sure, don't worry, watch that video, like I said, at the end of this video, and that will teach you why. So let's just mark this up. So we're going to mark off this as a previous break of structure on the monthly time frame. We then have this as a new break of structure here on the monthly. So we continue to be bullish, and now we need to apply our high and our low, our swing high and swing low. So when we see this break to the upside, we look and this is our valid low in the market. And again, you will be able to learn exactly why and how at the end of this video. This is just to show you that you can map this up across cryptocurrency, forex currencies, whatever you want to use. This will be a valid break of structure, but on the lower time frame, like the weekly. Now, I cannot mark a valid high up here yet, but if this monthly candle, which is today, closes down as it is, it will be a valid monthly high that I can mark out here. Okay, so that's the monthly time frame. We have a break of structure to the upside. We have a sweep, a larger pullback against this move. Price comes back into filling these areas of imbalances. We push away, we break structure once again. This becomes my valid low and my high has now potentially been created. So if we was to look at this move, price could come back into these areas of imbalances and head higher and create a new swing low here. We could see a further pullback all the way down into this area of discount to these areas of imbalances. But understanding, okay, this is marking structures. Yes, we have a wick through here, but this is just a sweep. This is still my valid high because this is where I first have my high created. Now, when price pulls back and we do push up, if I'd have seen a break of structure here, okay, then I would have had a valid low here to mark. And then we would have seen price creating a new high and then shifting back bearish in structure. Now that didn't happen. So I remain as this move here. Now we go down to the next time frame, which would be the weekly time frame. And we can do the same thing. We can now identify this longer term swing move. Okay, his head to the upside where we have the monthly high potentially being created today and the current low. Now, if we just go from the monthly low and we work our way up, we can identify and look for our current area. So price has pushed up. Okay, so from this low, it's a valid low here on the weekly. This is a valid break of structure on the weekly. Price continues up. This becomes a new swing low. We continue up. This is not a valid break of structure here on the weekly. Okay, so that's ignored. We continue up. This becomes a new valid high. Okay, crossed here. This is a new valid high as price starts to pull back. So when we see price pulling back against this move, we create this low here in the market and then we have a break of structure, which is the valid break of structure. So let's just mark this out as a valid break of structure so we don't get confused. That is a weekly BOS. Whoops, let's do that again. Weekly break of structure. There we go. So when we do have that break of structure to the upside, I can mark off a new swing low from here. Okay, that's my weekly low. Now you may be saying, well, what about this low? That's the lowest point of the move. But that isn't how we mark off using this strategy. And you'll find out by watching the next video coming up. Now, as we go higher, I don't have a valid high here. I can mark it on a weekly. But now from this high, where we've basically got a monthly high, I'm just going to change that to a weekly high. That is a valid weekly high. So now we have from this low to this high, my current trading range on this weekly time frame. So we are bullish on the weekly, but now a potential pullback. Now we are bullish on a monthly with a potential high being created this month. We could see a further pullback. So that means we could see this pair shifting structure on the weekly, or we may see another push higher, then a shift structure. But this is the weekly, okay? That's how we mark up our structure. Now we'll pop down to the daily time frame, and we do it all over again. And we just shrink the chart down. We can identify that larger swing hair move on the weekly time frame. Now what we're going to look at is where we see this pullback, okay, valid break of structure, pullback, a new valid break of structure, low. We then shift here to the downside, making this high. We then create this low. We create a break of structure to the upside. We sweep the low, a new break of structure bullish. That creates this as a low. The market goes up. We do create then a new high, okay, after this break of structure. And then we've just had another break of structure to downside with a new high there. So just mark this off. Okay, so this is my last break of structure on a daily. Now I like to go back and just confirm where I see prices been moving before I start adding these onto the chart. But now I can just go with current price. I don't need to go back and look at where price has been or anything. Now I can mark off a valid high, which is right here. And this, once you master this, it's very, very easy to go through the charts and do this what I'm doing. You can do this in a matter of minutes. It doesn't take as long as doing this video. It's because I'm going through step by step, trying to show you exactly what I'm doing. And again, that next video coming up at the end, we'll go through in more detail exactly why we're using these highs and lows, where I'm marking, and where we're seeing these breaker structures. So that's a daily break to downside. Now I do not have, and I repeat, I do not have a valid daily low to mark at this low. Now if I look back to the left, I do have a valid low that I would have had marked here. So I can mark this out for now as a daily low. It gives me a point of interest where price could continue towards. I'm not saying it's going to go all the way down here, but it could come towards this low. But I'm waiting for price to show me a valid low on this swing move down. Then I have my trading range for pull back into. Now we'll pop down to the 4-hour time frame, and you'll start to see how this is all linking together. So we have, this is our break to upside on the daily. This is our break to downside on the 4-hour. That's my current, daily high. I'll get that right. Break to upside on the weekly, the break to downside on the daily. Now we have the 4-hour time frame. And again, we'll go from where we see this current break on the daily. Price does pull back and creates another small break. We have our new high. We have another pullback with another break structure with a new high. Now we haven't quite created a new valid low. So just like the daily, we would have here a valid breaker structure. Let's zoom right in. So right here, we have our last breaker structure in the market on the 4-hour time frame. And this would be my current valid swing high. And that is how simple it is marking these up. Now I don't have a valid low yet, okay? We don't have one yet for potential. Now when we see a valid low, that indicates we're going to get a potential pullback. Now the same can be said when we saw this last breaker structure here. This was my high. Then we also have here, okay, areas of, okay, imbalance here, and here was closed through. But we do have this imbalance candle which acted as an area to hold price. So we pull back up inside. We have a valid low created as we see this candle here closing. That one was colored blue. And then we have a reversal where we look on lower time frames to target that 4 hour. Now, if we go down to the 15, we'll see if we can see that reversal out. So now we zoom out. Let's zoom right out on this 4 hour time frame. Look at how clean and tidy this chart is at the moment. We have just those 3 levels on each time frame. Now, I don't think we can go as far out for the monthly here, but we may be able to. Yep, we can see the monthly low. That's our monthly break of structure. We're starting to see a pullback into the monthly. This is our last weekly break of structure, our weekly low, our weekly high, and we've started that pullback against that area on the weekly. Now what's going to show is that shift is obviously a daily. We see the daily now shifting bearish, creating a new daily high as we push bearish on that move. And then if we look inside that move on the daily, and this is how you need to look at price, we have the break of structure on the 4 hour as we continue to push lower. Now a run on the daily bearish is going to show me a trend on the 4 hour. Or if we see a run on the weekly bullish, will show us that trend on the daily. So if we zoom out, you can see here where we see this run up. We just go to the daily time frame quickly. This is our weekly run, which is our daily strong bullish trend. And that's how you can look at price. So now we go down to the 15-minute time frame. And we'll just clean this chart up a bit here. So that's our current 4 hour high. Okay, we haven't quite created a 4 hour low yet, but we could. Now let's go down to price. Now I'm going to go back from this current high where we see the break of structure to there. Just going to look at how price breaks this move to downside. We leave this as a valid high. We then have a valid low created here, which is then broken, leaving a new high. We then have another pullback, a valid low, and we have a new break to the downside. Now, as price breaks, we have a very quick break of structure here and a new high is created with a new low. So you can see how the market does drop down, quick pullback, breaks lower. We then break out bullish. Now, when we see this breaking out bullish, it's pulling back to find an area to sell the market again. Now, I just back that off. We have a pullback here. Now, I don't have a valid high here. So this will be a valid low on this break of structure. Then we create this high as we break this structure here to downside. Now, from this high, we go all the way down to this low. That becomes my next low. We pull back. Eventually, we break structure here. This became, I believe it may be that high there. And then we come down to create this low. So now we're going to come closer to price. I did say we'll look for that pullback up here in a moment. So let's go closer into this movement. I need to double check my candlesticks. Okay, so yes. So in fact, my last break of structure is this pullback here. That becomes my 15-minute BOS. And my current high is this high here on the 15-minute. Now, if we see price shifting bullish here, breaking structure on this move here, because our current low, in fact, we break up. Let me back that off. I've just marked this wrong. So you can see that this is not pre-recorded to the point. I've not been through this chart. I've just realized I've actually marked it out wrong. So when we broke out here, we made this low, and that's a valid low. Let me mark it off for you. So this was a valid low. I just realized. Then as price broke structure once again, this became a new high. And then we pushed up. This became a new low. So then we had a break of structure there. But now we had a new break of structure to the upside right there. So now we have a valid break of structure. We then create this swing high, which we haven't broken back through. We just swept it. So now we have this our current move in the market. So we create this low and we have a new potential high. Well, this was a high originally. We pushed up, we sweep that high. This could push price lower into these areas here of imbalances, okay, to this area of demand, potentially. Then we could see another break of structure higher. Now we could just continue high for here, but this is not a valid break. So until we see a close up, then we can see a new break of structure. And again, you'll see that in the next video coming up. So that is my current bias, okay? Understanding that the market has basically made this break to downside on the 4 hour. Now we're seeing a shift on the 15-minute bullish. That's potentially the start of the pullback, and we can see price now continue to do this, pulling back against this 4-hour swing, shifting back out again, and leaving a new area to sell from to continue for the low once again. Now we don't have yet a 4-hour low confirmed. I like to see my 4-hour low confirmed and then see this shift at the same time, because when we start seeing them both confirmed together, that gives me a much higher probability on a retrace mode. Now what I did say, if we go back to the 4-hour time frame, we were going to have a look at that previous pullback here just to see if we could have found any type of entry. So you can see how you would use this to your advantage. Again, this is on Bitcoin, okay? The cryptocurrency, not on Forex. You wanted to see this. That's what we're going through right now. So now we just go back. Actually, we go back to there. We see that pullback. Okay, so we have a break, downside. So what we have really here is this candle, okay, acts as an area I expect price to pull back into. So go on to the 15-minute. And as I see price pulling back, now you can do this a few ways. I like to confirm my areas, but we can identify internally. Okay, so this is my last break of structure actually to downside here, and this is my high. So based on the 15-minute, that is my push down, that is my pullback. And this is how you can start to understand how the markets work. So then we have this leftover zone area. In fact, you can even do it from here, but we have this area of price. Okay, it moves sideways, price comes back in. So then you can do what we class as internal structure. And we look for the breakout, new low, price pulls back, new breakout, this becomes a new low. So then we have this high, we then break out with this candle, we have a new low, we pull back up into this break area. That's where you can look for an entry, understanding that we've shifted out with the internal structure, and then we start to run for this low. Now obviously you can go through even lower time frames here, all the way down to 1 minute when you're confirming entries, and we have plenty of videos in this playlist what will help you to see exactly how we use that. Hey traders, we'll get back to the video in a second, but if you're tired of second guessing trades and struggling for consistency, listen up. Danny was just like you, stuck in a losing cycle, down nearly $300,000. Then he joined the 90-day profit trading system. Now he trades with confidence and has already made back a quarter of those losses. This system gives you everything you need to trade profitably. Step-by-step strategy, personal support, and lifetime community access. Spots are limited, and we only take a handful of traders each time enrollment opens. If you're serious about finally seeing results, click the link in the description now before it's too late. Now back to the video. I do suggest checking out this next video where it's going to help you step by step on how to mark all this up if you're not fully sure how to do this yourself.